Welcome back. I'm Pratap here. Today is the 7th January 2025. In this video, I'm going to evaluate the high liquidity zones identified in our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars. And it is a complete free training. You can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Okay, now let's get into the analysis of the high liquidity zones we identified in our yesterday's end of the day session. Yesterday we identified 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 high liquidity zones from daily and 75 minutes time frame. The first one is Sona Comps, that is Sona Forgings. This stock we already discussed in lesson 28, the most recent lesson, pierced zones. Of course, it is not our software did not identify this as a pierced zone. Our software identified this as a high liquidity zone, 75 minutes high liquidity zone. But if you strictly observe, this 75 minutes high liquidity zone is created inside daily pierced zone. How do we know about this daily pierced zone? Lesson 28, we have analyzed this stock. I have drawn this chart on the this zone, this daily zone on the chart. Yesterday when our software identified this zone is exactly there inside the pierced zone. Pierced zone, I explained 3 different strategies. This is the third strategy. Lesson 28, you learned the pierced zone strategies. In that, this is the third strategy. What is the third strategy? Says new order flows inside a pierced zone. Mostly they are very powerful. Look into this. Rally base rally. This is a 75 minute zone created inside a daily pierced zone. Of course, we don't follow pierced zone. We follow our HLQ zone strategy. But what I am trying to say, the zones created inside the pierced zones are very powerful. They are giving even more profits in a short duration. Yesterday we discussed, do you remember? Sinjan we discussed. At 15 minute zone it has given a short term trade. Let us see today how much return it has given. Yesterday we discussed, I told you maybe today or tomorrow it will reach the target. Today means this day or tomorrow. That is what we discussed yesterday. And today reached the target. That we will see later. But first let us focus on this. Because this is a successful trade. We got the trade. And first of all, how we fine-tuned this zone. This base rally identified by our software. So this one is fine-tuned with 15 minutes time frame. So here we have a 15 minute zone. So this is the ERC candle, failed ERC candle. You can use it as a leg-in. Maybe drop you can consider. You have 2 base candles and a rally candle. Hide this gap, you will get clarity. Drop, base and a medium size leg candle is also part of the base, and then a rally candle. And after that, have you noticed these are all the base candles again looks like rally, base, rally. But what is the origin? This is the origin. This drop, base, rally is the origin for this rally, base, rally. LOTL. In the LOTL, in the origin we will focus. That is the area we have strong institutional order flow. So that's why our focus is on this drop, base, rally. And moreover, it already picked up the orders from this zone. And then this LOTL zone is created. Okay, within this 15 minutes, we have a fine-tuned 5-minute zone. See, this entire zone, order flows are inside this daily pierced zone. See, this daily zone is pierced. And after that, new order flows created, and that became a high liquidity zone. So here we have two zones here. One is the drop, 3 base candles, you can consider rally, or even you can consider this as a lagging failed ERC, that way lagging. Anyway, it doesn't make any difference. The same order flow. We will be fine tuning up to here. And rally, and again rally, 3 base candles, and again a rally. But this rally, base rally, is a tested zone. So that's why we can't plan any trade here. And this is the area we have to plan our trade. Even if it is not tested, please listen carefully. Even if this is not tested, mostly we plan our trades in this zone. The reason is, in case if it is stopped out, the stop order is almost close to this zone. At that time, you have to combine both these zones. When you combine both these zones, your risk management is very, very high, intraday point of view. So even then, you will be preferring in this lower zone only. But anyway, the first one is already tested. It is not a fresh zone anymore. And this is a fresh zone. The one in the bottom is a fresh zone. See what happened today. Today price is entered into the bottom one. When? Morning 9:50 candle. Then what is your target zone? Target zone is, this is the one. Here you have the 15-minute zone. Actually, this stock is having 75 minutes high liquidity demand zone and also 75 minutes high liquidity supply zone. Either side you get trade opportunities. That's why I have fine-tuned both these zones. Here it is having a 15-minute zone, and within 15 it has 2 order flows. One is 5 minutes and another 5 minutes. In case prices reached this area, we would have planned another trade. Came very close. And here it just reached the 15-minute zone. This 15 minutes target reached here in this candle. When? 2 o'clock 20 minutes candle, it reached the 15 minutes target. Maybe some of you may not be waiting up to here, but this is, we are checking the performance, whether it reached 15 minutes zone or not. I am sure the most practical scenario is most of you might have exited here. Here a lot of candles are having rejections. Probably you may feel in this area strong order flow will be there. Probably here you have a drop base, drop is there, you will be exiting. This is the 5-minute zone. Maybe you may feel it is working like a high liquidity zone and you may exit. Many people will book the profits. Because another profit, remaining profit is this much only. With a fear, people will be having fear of losing the profit. That's why we will book profits. But performance point of view, it reached the 15 minutes target zone. This is the 75 minutes supply zone, high liquidity zone. This is a drop, 3 base candles and drop. And this one again I fine-tuned with 15 minutes time frame. Here rally, 2 base candles, drop is there. Again fine-tuned with 5 minutes time frame. See here drop, base, drop. And here you have a rally, 3 base candles and drop. These 2 5 minutes order flow. But our target is this 15 minutes zone. This rally, base, drop, that is the target reached in this candle. This is the way it is a successful trade. Actually, this first 5 minutes I am just drawn this. I want to show you it is a tested zone. But this is our actual trade plan. Okay, how much profit Son of Forgings has given? Son of Forgings, that is nothing but, the profit is 9,532 rupees profit, which is 9.9% ROI it has given. As per one futures margin cost, 9.9%, close to 10% ROI it has given. And what kind of trade it is? High liquidity. But this high liquidity zone is there inside the daily zone. See here, this daily zone we discussed in lesson 28 last Sunday. This rally based rally, I released the video lesson 28 about Pearson zone strategies in our phase 3 training program. In that video we discussed this stock. In this stock, in this Pearson zone, a new order flow is created, and the new order flow is a high liquidity zone. Why it worked very well? Because many people, when they do the top-down analysis, this zone is pierced, and the normal supply-demand zone traders, they simply ignore this area, and they look for another demand zone somewhere below will be there. Maybe here drop base, rally is there, they focus, and this stock they will analyze, and this area they will remove. This is the one side effect in top-down analysis. We should not say side effect. It is because people are, there is no concept like Pearson zones in supply-demand zone price action. There is no concept. This is the concept I developed because I did a lot of R&D in this area. As I explained in lesson 28, I introduced a new zone freshness type pierced. Based on that, accordingly I developed the software. The main architecture of NeoStock supply demand zone software includes Pearson zones. That's why we got complete control on the system. Based on the Pearson zones, our software takes all kind of decision making. That's why it is working perfectly for us. It's not about getting the profit, it is getting good profit or a big profit. That is important. Getting profit is different, getting big profit is different. That is what I observed in Pearson zones. That's why I developed strategies for based on the Pearson zones. That is what I explained all in lesson 28. Maybe lesson 28 is a very big video. It's almost 2.5 hours video. But that is essential for everybody to listen minute by minute properly and understand the concepts, so that in future you will get a very big profits. Yesterday we discussed Sinjan, right? That is also there inside the Pearson zone. But yesterday it gave short-term trade instead of intraday trade. You should hold that short-term trade. Today it reached the target today. That I will show you. Because Sinjan supply zone is also there, high liquidity zone. But that Pearson zone new order flows even violated that high liquidity supply zone. See how powerful those order flows are. Maybe our trades, supply zone trades, if you would have taken, it would have been stopped out. The reason is they are the new order flows. Demand order flows are from the Pearson zone. Pearson zone order flows are such a heavy, such a strong order flows that even violated its opposing high liquidity supply zone. That we will discuss. We have interesting lesson. Because lesson 28 concepts, how well they are working, you all must understand. Because important strategies, you should not leave them just like that. Ignoring the profit giving concepts and focusing on the concepts that gives you small profits or less success rate concepts, if you learn, you won't get much benefit. See, the ultimate goal of developing NeoStock software is to identify the zones that gives huge profits. That means we need concepts beyond the regular supply demand zone concepts. Everybody is learning outside, paying the money and they are learning. But you people, without paying even a single rupee, you are learning all these advanced strategies. Do you know people charge lakhs of rupees if they develop these strategies from you? But at least you people should be thankful to me. But I know none of our members are, at least I would not say none, majority of our members, 99% of our members, not even having the courtesy to say thanks or even like the video. Go and check how many members liked our lesson, how many members at least they conveyed their thanks. In lesson 28, go and check the video. If you are giving free, people will be feeling like that. If I am charging, see, premium videos, why I am charging the money? Just because of you only I am charging. I didn't have any mind to charge that money. Today, why people are paying the money and buying premium videos? I didn't have any thought in my mind. Because you people are, at least 2 or 3 times I begged you people. Like the videos, comment the videos and promote the videos so that our channel will grow, more people will come. If more people will come, maybe ad revenues may increase. If that is the case, don't require anybody to pay any money. This was my intention. But everybody simply, why should I like the video? Why should I share the video? Or why should I comment the video? This is the way majority of the people felt. What happened? Our channel did not grow. I was in a position to close the channel in the month of last year, in the month of June, July, August period. Because some members came and they requested me for the paid subscription. Because of them only today the channel is growing. Because of them only today you are learning the new concepts also. If I would have closed the channel, how do you get a chance to learn the new concepts? Free of cost you people are learning the new concepts. At least courtesy's sake you have to like the video or comment the video. I am sorry to say this. Some people are asking why you are taking a premium. I am taking premium because of you people only. Clearly I told several videos, I told even Q&A, some of the Q&A videos also I said, I don't have any intention. But you have to like and comment the videos and share the videos and promote our channel. Small group of people itself is not liking and commenting and not promoting. How do you expect the channel will grow? YouTube algorithm does not promote our channel. Ultimately, who is losing? It's not me. There is no, if the channel is closed, do you think, do I get any loss? No, I don't get any loss. I just created this channel. People should be aware of my software. But today you are getting more than what the software is giving. $8,000 cost. It's more than 8,000 because the US people, they are charging 8,000, but they are not giving all these phase 3 training lessons. Their training course ends with the end of the phase 2 only. But all these are new concepts I developed, advanced strategies they are not giving, but still they are charging $8,000. If you compare with that, probably our course will be definitely more than $20,000 cost. When you get free, people don't realize its value. That is the biggest problem. People realized premium videos only after I made this service as a paid service. 1 year, almost 1 year I gave free for all these everyday reports. People didn't care, except few people, they didn't care. But all the people now, newly coming people, they are realizing, because it is a paid service, they are realizing its value. With dedication, they are learning the concepts. Once they paid the money, with dedication, they are analyzing the charts. Maybe first time, maybe they may get some stopped out trades, but dedication is there. That dedication is giving experience to them. Second month or third month, they are getting profits. That way, some people are continuing the subscription for the last 5-6 months. And newly joined members will continue in the coming days. Of course, few people will drop out, that is expected thing, because without learning the concepts properly, and if you take premium subscription, what is the use? That's why I kept a prerequisite. Clearly, we are telling all the people, did you complete the course or not? Then only we are allowing them. But how well you prepared, only you know, we can't assess that, right? So learn the important concepts. How powerful lesson 28. You never know. This is a classic example. Yesterday you have seen Sinzin. That is another classic example. You will be seeing more examples in the coming days. 10% ROI is not a simple during the intraday based on one future's margin cost. People are struggling to get 1% or 2% profits, but easily you people are getting 3, 4, 5, 6, 7, 8 up to 10%. Easily you are getting the profits. When the stock is giving profits and if you are not in a position to take the profits, the problem is with me or problem is with you. That's why in our channel pinned messages, training instructions, why I mentioned. Even in the premium video, in the training lessons I added one premium video, first video. The packages details. There also second half of the video, I explained orally all prerequisites for learning the training course. How many of you are seriously doing paper trading? If you seriously do the paper trading and you practice, 90% of your trades will be successful. I'm not talking about stopped out trades. Successful trades, what I am showing, in that 90% you will be easily will be in a position to take. Maybe 10% you may miss them until you get some better experience. I'm talking about within the successful trades. So how I am drawing, you will also be in a position to draw exactly the same way. Some of our premium subscription members who has been doing HLQ analysis trading for the last 7-8 months, they are exactly drawing the way how I am drawing. At least 80 to 90% level they are drawing. If they are drawing, why can't you draw? You will also draw, but only thing is you have to practice. Okay, now let me move on to the next stock, CUB. CUB is lesson 22 trade. What is lesson 22 trade? Lower time frame zone as an horizon to the higher time frame. This is a 75 minutes supply zone, high liquidity supply zone. Our software identified this as a drop, 2 base candles and a drop. But have you noticed at the digital line, there is one more zone is overlapped, 15 minutes zone. What about inside? Inside there is no proper order flow. Go to the 15 minutes, you will understand. See here, 15 minutes you have a drop candle, base candle, base candle, base candle. All these are all base candles. There is no proper leg out candle here. Such kind of zones, what happens? Easily it will pass. See how easily it passes. But here, have you noticed? We have a drop. Even I consider this is also considered as a drop candle, but base candle. But I consider this is a drop. The reason is very simple. I have seen narrow range movement within this area. Try to understand how I am analyzing. This is the area narrow range level, and this is the area imbalance started. That's why I just consider this as a leg-in. That's it. Simple logic. But generally how people draw? Drop, 1, 2, 3 base candles and drop candle. I always focus, first preference I give where exactly the narrow movement is there. In that narrow movement area, imbalance took place or not. That way I will try to analyze the stocks. That is what experience. You will also get, initially, if I teach all these things, you will get confusion. First learn as per the theory. Once you get a perfection in the subject, you can take deviations from the theory. If you draw the zone, you will draw this zone like this. Does it make any difference? No, it doesn't make any difference. Drop 3 base candles. Anyway, you will find this order flow. But why I consider this as a leg out is because I have seen, okay, here some narrow range movement, some balance is happened here. Here, imbalance took place. Is a leg out candle. Maybe we can consider this as a leg in. That way I have drawn like this. Simple. Got it? Okay, anyway, I consider drop 2 base candles and drop, and then go to the 5 minutes time frame. But 5 minutes time frame, order flow is here. We have a ERC, failed ERC. I consider this as a leg in. These two are base candles, but have you observed here, instead of drawing a zone like this, I have drawn zone like this. Why? Simple, risk will be minimized because I have seen clearly we are seeing imbalance continued from this candle. Maybe because the time is over, this candle is completed. Next you see, from the close of this candle again it is continued. That way I know this is the area where we have very strong institutional order flow. This is just experience, that's it, nothing more. See exactly that area prices entered today. Just touched, maybe some 5 or 10 paisa, went inside and then came down. But remember, if you don't analyze, sometimes you will be missing the trades. Narrowly you will be missing. That's why at your level, even risk is a little high, draw like this only, at your experience level. Because I am doing every time, if you are doing like this, sometimes you make mistakes. Your real talent is understanding where the imbalance is started. That is important. Experience, definitely experience is required to understand where exactly imbalance, so that we narrow down the order flows. When you narrow down, risk will be minimized. Your profits will be improved. See, if you take a trade here or if you take a trade here, which one will be having maybe 100 or 200, 300 rupees extra profit, but still profit is a profit, right? That small extra profits will improve our capital in the coming months or years. So exactly that area prices reached and then turned back and started moving down. Exactly 1:3 RR it achieved up to here. And this is the area only prices moved most of the time. And we have to exit here. The reason is because there is a gap. In this gap area, we don't know what kind of order flow. Up to 1:3, exactly here 1:3 level it reached. After that it struggled. Maybe you can exit a little before itself because there is a gap. Maybe you could have exited here, even though it is not achieving 1:3. Still, you might have got 1:2, some 2.8 profit you would have achieved, close to 1:3. Why the blue color line I am telling you? Because from there the gap is starting. Don't want to take risk. I don't want you people to take risk. Maybe few extra profit you will get. In case if it turned back from here, see here, first time when it reached, then it started moving up. And again came, now again further came down. Again moving up, further came down. And here after that it didn't move further. But here by the time it reached here, 1:3 RR is achieved. 1:3.08. That means 1:3 RR. Okay, why I am concerned about this 1:3 RR? To say whether this HLQ trade is successful or not. See, reached 15 minutes target or not is secondary. First, this HLQ trade, whatever our software is recommending, is successful or not. To confirm, minimum 1:3 RR should be achieved. Of course, for experienced people's point of view, 1:2 point is more than enough. But why I am saying 1:3? Because you people should be in disciplined way. If I am taking 1:2.5 RR, you will also start taking. That way you will make mistakes. One day you will get losses compared to the profits. That's why I want to ensure at least you people are following 1:3 RR mechanism. I mean risk management. Okay. How much profit Cub has given? Cub has given 12,800 rupees profit, which is 7.4% ROA. The 1:3 RR itself, it has given 7.4% ROA. Because here risk is a little extra here. That's why more reward is also given. What is our average intraday ROA? 6%. We got better than that. So achieved 1:3 RR, and what kind of trade it is? A fine-tuned 5-minute supply zone in 15 minutes horizon of 75 minutes HLQ zone. It's a very powerful concept. Lesson 22. Lower time frame zone as an horizon to the higher time frame. I think we got one more trade also today. Yeah, this is JK Cement. JK Cement is also a 5-minute zone as an horizon. Now let us look into that JK Cement. This is the 5-minute horizon trade. This is also a 75 minutes high liquidity zone. Sorry, not 75, daily high liquidity zone. This is a daily high liquidity zone trade. This is the only one daily high liquidity supply zone. Let me go to the daily time frame. So yesterday our software identified this as a rally, base and drop. This is the daily high liquidity supply zone. This daily high liquidity supply zone having a 75-minute zone here. Go to the 75 minutes. Is there any 75-minute structure here? No, we don't have any proper 75-minute structure. This is the ERC candle, but if you draw a zone like this is not a valid candle, because the candle should completely come out of the zone, but that is not happening here. So that's why this is the area I didn't consider proper. But in the recent time, what happened? We have a rally candle, we have a base candle, we have a drop candle completely coming out of the zone. So failed ERC candle can be used as a leg out when the candle is completely coming out of the zone. Only in that scenario only you have to use a failed ERC candle. Suppose if the candle failed ERC, somewhere here the candle is closed in the middle of the zone, you can't use it. Only the body should come out of the zone. Failed ERC is having a small body. It should come out of the zone. Okay. So dynamic view point of view, this is a drop candle, big drop candle, dynamic view. So rally, base, drop. So this is the 75-minute zone I have drawn. And this 75-minute zone, go to the 15 minutes time frame. So there is no proper 15-minute structure here. Within this 75, maybe you can draw a 15-minute structure here, but this is not a fine-tuned zone. Maybe drop with the hidden body, drop, 1, 2, 3, 4, base candle, drop. This is not a fine-tune. So we are ignoring that. But within this 75 minutes area, even 5 minutes also, there is no proper structure here, the 5-minute structure within this. But anyway, 5 minutes you can't draw. The reason is there is no 15 minutes zone. But it is having, next thing what you have to look for, verify whether this zone is having any LTF zone. So I went back, went, and here there is an excellent drop, base, drop. This is the legging, medium size leg candle. You have a base candle and you have a large candle and follow through candle. Drop, base, drop. This drop, base, drop exactly overlapped at the distal line of this 75-minute zone. So 75-minute zone picked up the orders and then came down. And see today, first time after this zone is created, first time prices entered into this zone. Gave a trade, again a rally base drop is created and reached the 15 minutes target. Actually 15 minutes zone is not very clear, that's why I have fine-tuned to 5 minutes level and identified a high liquidity zone, 5 minutes high liquidity zone inside 15. 15 minutes structure is not really comfortable. You can consider this as a leg-in, okay fine. You have 2 base candles, leg out, but see the leg out candle is almost same as leg-in candle, but the imbalance started from this candle and this candle is looking little bigger. Do we really consider this as a base candle or can we consider as a ERC, failed ERC? Some doubt. It's like a border, it's in the border in between large candles and medium size candles. In that border maybe this size might be. So you might be having difficulty. I also sometimes felt whether to consider this or not as a base candle. And if you want to draw somewhere here, you have draw base rally is there. And very far away. Do prices really reach up to here? We don't know. So that's why what I did, I went to inside this 15-minute zone. If the structure is not good, definitely I would have marked this drop base rally. But if the structure is strong, it doesn't let the prices to get here. Still, this is a convincing structure, not very convincing to consider as a 15-minute zone. So that's why go to the 5 zone. Now you see, you have a drop, base, rally, follow through candles. Not only that, here first time, second time, third time, at the end of the almost, that's it. This is keep on holding this. So somewhere you have to exit. You should get confirmation. This is a strong order flow. Either here or here you have to book your profit. In case if you are expecting this has to be violated, if you are having, this is strongly holding. It's not letting the prices go down because supply is also strong for some extent. After that, institutions created a rally base rally and violated this zone. But you may ask a question here, rally base drop is also created, we can take a trade. Yes, if anybody would have taken, maybe your second trade would have been stopped out. But anyway, first one is successful. That is good enough for our performance evaluation. But your individual's point of view, definitely you might have planned a second trade here because a rally based drop is created. Once again, maybe this could be acting like a high liquidity area. Based on this, we are thinking it could be high liquidity. But this time it didn't work. That's why I told you, in LOTL scenarios, why I am considering only 80% chances of having high liquidity is, this is a classic example. See, today LOTL zone is created, still it is violated. Why? It comes under 20% category. We don't know the reasons. But this is having a reason, let me tell you. Let me first go to the 15-minute zone. Is it created a rally-based drop? We have a 15-minute zone is there. Inside again you have a fine-tuned 5-minute zone is there. Of course, this is the origin. This 5-minute zone is the origin. Because we have all these strong indications, it has to be successful. Definitely we plan a trade, no doubt in that. If anybody is planning trade in JK Cement, definitely you would have taken second trade in this. But second trade is violated. Why it is violated? Because institutions also decided to violate this zone. They created a drop, 2 base candles and a rally candle with a huge order flow. They violated this zone. And this 15-minute zone is not having achievement, but it is a fresh zone not having zone achievement. Because this zone it is not violated. If this 15-minute zone would have violated, it would have got the achievement. But this drop, 2 base candles and rally, it got the achievement after violation. Not only violated this fine-tuned, but this entire 75-minute zone is also violated. See here, 75 minutes candle is closed outside the zone. So it is not a pierce. Maybe prices came, it is not a pierced zone. Why it is not pierced? Because in this candle, complete candle is closed outside the zone. That means this zone is completely violated. After that, next price action came here. Remember, this is not a daily zone. This is a 75-minute zone. If this is the daily zone, price closed inside the zone, it could have been a pierced zone. But this is a 75-minute zone. After this candle, this entire zone is gone. That's it. So that's why if anybody would have taken a second trade, your trade would have been stopped out. Okay, performance point of view, already we got one successful trade here. So that is good enough for us to check it is a successful trade. So this is the daily oh my God. This is a daily zone, I'm sorry. This is a daily zone. Daily zone is not violated, it is pierced. I'm sorry. Go to the daily time frame. It is a daily rally based drop. So zone is pierced. If tomorrow's candle closes outside, then it will be violated. But as on today, it is pierced zone. But we can't confirm. After that move, it should come down, and then we believe this is a pierced zone. Just one candle, you cannot apply all lesson 28 concepts here. A price action should take place. It should come down, and the next attempt, any lower time frame zones are there. There you can plan your trades as per lesson 28 concept strategies. Okay, sorry for my mistake. This is not 75. It is entire thing is a daily zone. Okay, this is about JK Cement. How much profit it has given? JK Cement has given 5,650 rupees profit, which is 5.2% ROI as per one futures margin cost. Next one is HCL. HCL is having one stopped out trade and one successful trade up to 1:3 RR. Two zones it have. One is violated, first one. Second one gave, but it reached up to 1:3 RR. This is a 75 minutes high liquidity zone. Rally, base, rally. This is how our software identified. And when I fine-tuned, 2 5-minute order flows are there within the 15-minute zone. We have a 15-minute zone. Drop, base, rally. Another 15-minute zone. Rally, base, rally. 2 15-minute zones are there. And each one is having a fine-tuned 5-minute zone. Go to the first. We have a rally, 3 base candles and a rally. This is the 5-minute zone. And here also we have a drop candle, 2 base candles and a rally candle. This is the second one. And the first one is stopped out. Maybe 2 candles. It was holded for some time, and after that this zone is violated. And then prices entered into the second one, and the second one pushed the prices up to 1:3 RR. We have achieved 1:3 RR, 3.02. That means 1:3 up to here. So that's why it is a successful trade. Second one is, first one is stopped out. Okay, how much profit losses they have given? First one, it has given 717 rupees loss, which is a 0.6% negative ROI, the stopped out trade. And second one has given 5,337 rupees profit with 4.4% ROI as per one futures margin cost. If anybody would have taken trades in HCL, probably you would have got around 3.8% ROI after deducting, because first one is stopped out, right? So overall you would have got 3.8% ROI. Maybe around 3,500 or 600 rupees, 4,600 rupees profit you would have achieved after deducting this loss. Or maybe you might have got a little extra loss also, because these are the minimum losses I am calculating. Remember, you can't get less than that loss. That is what I mean. Unless you take a deep entry and that way you manage the risk. But otherwise, based on type 2 entry point of view, that is the minimum expected loss. This is about HCL Technologies. And next one is Shenzhen. Shenzhen actually daily high liquidity supply zone. But that daily high liquidity supply zone is there inside the pierced zone. Daily pierced zone. It's not daily supply zone, 75 minutes high liquidity supply zone. Let me go to the 75 minutes time frame. Yesterday we have discussed about this candle trade is a 15 minutes trade. We have a fine-tuned 15-minute zone here. By adding a small entry buffer, your trade will be executed. But fine-tuned 5 minutes level, even by adding by 95 paisa or 85 paisa margin, you miss the trade. That is what we discussed yesterday. But short-term traders would have taken a 15 minutes yesterday, but they should hold the trade. That is what I told you yesterday. And today it reached the target, 75 minutes target. Even slightly this zone is pierced also. The 75-minute zone is pierced. This is a 75-minute zone. Why I am saying 75-minute zone pierced? Because none of the 75 minutes candles closed outside the zone. All are inside the zone only. And as today 3 times this zone is pierced. First candle, second candle, third candle. Probably something here might be, maybe strong order flow might be here somewhere here in the lower time frames. But anyway, our interest is not on this. Our interest is about this daily pierced zone, the strategies you learn. See here, you have a daily pierced zone. Oh, sorry, not this one. This is the one. We have a drop, 1, 2, 3, 4 base candles and a rally candle. So this is the daily zone, and this daily zone is pierced by picking the orders from a 75 minutes zone below the daily. All these things we discussed in lesson 28. Even Sinzen also explained in lesson 28. Look into the comment section of the video. I have added the timestamps for each stock I explained. If you click the timestamp, directly you go to that time, and from there you can listen the video. I have added in the comment section, or even in video description also I added the timestamps, both places. So yesterday we discussed this. And yesterday I told you, here inside this pierced zone, institutions created a new order flow as per the third strategy you learned in lesson 28. The new order flows inside the pierced zones, they are very strong. That's why our software recognized this zone as a high liquidity zone. Okay, it's not because of pierced zone, it is recognized this zone as a high liquidity zone. That high liquidity zone is there inside the pierced zone. That we identified later. And see this 75 minute supply zone, this is also created inside the demand zone. But demand zone, demand will be much stronger than the supply. So that's why the supply is violated easily today. Especially because of this new demand inside the pierced zone. So this is the one that has to be removed from the chart. Just yesterday I kept it for your explanation, but this is the actual trade. 15 minutes trade. This is the 15 minute zone here, this zone. This is the 75 minutes zone, and it is having a lower time frame, 15 minutes horizon. From there it picked up the orders from the 15 minutes and sharply moved. Yesterday did not reach the target. Today it reached the target, the 75 minutes target. Go to the 75 minutes. This is the 75 minutes target. Here also LOTL zone is there, 75. Rally base drop. Actually this is our target, actually, strictly speaking. Prices should reach here, but in between there is a order flow is there. This order flow is not strong compared to the demand, and this is the one actually fresh zone. This is a tested zone. This is a fresh zone. That's why you have to plan your trade here. Go to the 15 minutes time frame. Here you have a drop, base drop. Here also you have a rally, base drop. This is the 15 minute zones. And within 15 minutes you have a 5 minute zone. Here you have a 5 minute zone. You have drop, 1, 2, 3, 4 base candles and a drop. But I fine tuned up to here because I considered this as a drop candle, failed ERC. This entire 15 minutes candle is I considered as a drop, failed ERC as a leg-in. These two are base candles and a drop candle with some hidden body. Because a pro gap is also there, I thought this could be a very strong, definitely this could be a very strong institutional, but I don't know. Today it is violated. Sometimes this comes under 80% scenario. The failures of HLQ zones. That's why today it is violated. Easily violated today. Not even 1 or 2 candles giving resistance did not happen. But anyway, and after that prices further went and this zone is violated. We predicted this zone will be violated. The reason is here this rally base drop is already tested. Prices went deep here. This is actually first test. This is second test, today violated. Today also gave third test, but not good enough, strong enough to push the prices. Today demand is very strong and pushed. Why demand is very strong? Because demand is coming from piercer zones, new order flows. Institutions are keeping a very strong order flows inside the piercer zones. That's why you land a third strategy. New order flows from the piercer zones. Maybe that could be one of the reasons this zone is violated, but whatever it is, whatever the reason it is, if it is violated, performance point of view, it is gone, that's it. Whether you have good knowledge and avoided this stock or did not consider, that is a different story. But HLQ zone's performance point of view, it is violated. It is a HLQ zone. Stock is near the HLQ, supply zone yesterday, end of the day report. And today it is stopped out and you have to calculate, consider this stock as a failed stock. So that's why we considered Shenzhen is failed. It has given 1,150 rupees loss, which is 0.7% negative ROI as per one futures margin cost. Here only 717 rupees, 0.6%. Here double, almost double. But why it is less? The reason is here margin cost is small, maybe around the HCL Tech margin cost is around 1,10,000 and here 1,70,000 around Shenzhen. Due to that reason, even though the loss is more, your ROI is, loss is more means in terms of your price, not on your investment. On your investment, 1,717 is 6% equivalent. But here 1150 on investment, 1,70,000 is, this is 0.7%. Percentage wise they are same. But number wise, this is a small number, this is a big number. So that is what I am trying to tell you. So that's why whenever you see big number but small ROI means your future margin cost is high. That is what you have to understand. Okay. But this shows the power. See how much profit it would have given. Go to the 75. Yesterday you would have taken a trade here, 15 minutes, short-term trade. Because in case if you are aware of piercer zones concepts, you are aware of piercer zone concepts are very strong. We discussed on Sunday. Sunday I released the video. Let us assume Monday you took the trade for short-term trade. You holded the trade. At what price you would have taken? Yesterday we have drawn somewhere here our entry buffer. And today you exited somewhere here. Let us assume in this candle. We have a rally base drop because this is the target we discussed yesterday. Let us assume somewhere here you exited. So what is the value? Exit value 875.35. Just I am showing you this calculation to understand the power of piercer zones. 875.35 and here 842.55. So each share you got 32 rupees profit. In 2 days, yesterday you took the trade and today you exited the trade in here. If that is the case, how much profit we would have got? Let's go to the margin calculator. This is Shenzhen. So January futures. So 1000 is the quantity. And your investment for taking these 1000 stocks, 1,56,905 or little less, because here this is today's. Yesterday the value could have been definitely around 1,55,000 rupees or 55,500 rupees. Somewhere it will be there approximately. Approximately I am telling. So 32 into 8 into 1000, you would have got 32,800 rupees profit. So into 1000, 32,800 rupees profit divided by 1 lakh 55,000 rupees, say. Into 100. You would have got 21% ROA in 2 days. 32,000 rupees profit, 32,800, and based on your investment, it could have been 21% ROA in 2 days. Why it happened such kind of huge profit? Because of pierced zones strategy. The new order flows inside the pierced zones are very powerful. That is what you have experienced in lesson 28. Because lesson 28 I gave you some around 8 or 9 examples or even more. And continuation to the lesson 28 in HLQ zone analysis, live trades, you are seeing these results. Live trade opportunities, I should not say live trades, live trade opportunities. Whether you take the trade is a different story. But these are the opportunities. Our software identified the pierced zones. Our software identified the high liquidity zones. When we combine both, some of the high liquidity zones are there inside the pierced zones. And those zones are working in an extreme level. You may say, yes, but since then the supply zone is violated today, it didn't work, you may say. You should not tell like that. The reason is, this pierced zone is not a supply zone. This pierced zone is a demand zone. Because demand is strong, the supply is violated. Maybe if you are very well aware of this concept, you would have avoided this trade today in this stock. If you are aware of these concepts, pierced zone concepts, inside the pierced demand zone, taking a supply zone trade, you would have avoided. You would have taken this trade if there are no order flows, new order flows, demand order flows inside this zone. At that time, supply zone trades you would have taken. Already demand zone order flows are there. Yesterday only we discussed. This is how you apply your intelligence when you learn more concepts, and when you combine, your decision making will be much powerful. Why I developed all these concepts? Why I am explaining one by one slowly? I am ensuring, okay, maybe by this time you would have got good knowledge on the earlier concepts. Then only I am getting into the next strategy. Why no hurry? Learning everything, and if you don't digest, no use with that. Learn slowly, digest. After you digest, the next topic I am teaching you. That way you get complete perfection on these concepts. Learning all at once, what you do? Nothing you will do. One by one, slowly. Especially from lesson 21 onwards, slowly, once you become a master in one strategy, then only you should focus on learning the next strategy. Remember, lesson 21 onwards, phase 2 training, they are all about strategies. Unless you mastered in one strategy, moving to the next strategy may not be may not be a wise idea. See, first you all got a good grip on HLQ zone strategies because that is giving good profits. That's why I made it in lesson 21 itself. After that you should give some gap and then move on to the lesson 22. After that you should give gap, move on to the lesson 23. The bullish and bearish trade setups you learn in phase 2. More detailed explanation I have given in that lesson 23 and lesson 24. Like that you have to learn the concepts. Everything if you learn in one stretch, you won't digest. Okay, now let's quickly complete the remaining analysis. We didn't get the trades, and first one is Adani Enterprises. This is a daily high liquidity demand zone. This is a drop, 4 base candles and a rally candle. And this is having 275 minutes order flows. This is the first one, rally, 1, 2, 3, 4 base candles and rally. And another one is rally, 1, 2, 3 base candles and rally. and both are fine tuned with 15 minutes time frame. Here you have a rally, failed ERC rally, base rally, 15 minute zone. You have another medium size leg candle rally, base rally, another 15 minute zone. Both again fine tuned with 5 minutes time frame. First one again you have a rally, these three base candles and a rally candle. And in the second also you have within 15 minutes you have a rally, base rally. See, small zone, but this is working like a high liquidity. Multiple times a drop base rally is created. Again rally to base rally. Next time again tested here multiple times. Maybe it could be, maybe 80% level we can assume this could be a high liquidity zone. But if you want to take a trade here, first this has to be violated. This is a fresh zone, not a tested. But anyway, today prices did not enter into this zone, so that's why we didn't get the trade. The next one is National Aluminium. This is also daily high liquidity demand zone. We have rally, base rally, and this one is fine tuned with 75 minutes time frame. See here you have a drop, base rally. Again this one is fine tuned with 15 minutes time frame. You have drop, base rally, but again rally, base rally you can't consider because this is the this drop base rally is the origin. From the origin it picked up and then the journey started. So our focus should be in this drop base rally, but 5 minute zone should be a fresh zone. That is what we have to look for. Look into the 5 minute zone. At least type 2 proximal should be fresh. If type 1 is tested, still okay. Type 2 you can consider. Anyway, here you have a drop base rally. Even type 1 is also a fresh. Okay. Only 15 minute zone is tested, not the fine tuned 5 minute zone. But anyway, today prices did not enter into this zone. We didn't get a trade today. Today's candle is completely outside the zone. Next one is OFSS. This is also a daily high liquidity demand zone, drop base rally. This one is fine tuned with 75 minutes time frame. You have two order flows here. We have a drop, two base candles and a rally candle. Here you have a drop, two base candles and a rally candle, 75 minute zones. Again both these 75 minute zones fine tuned with 15 minutes time frame. Now look into the 15 minutes zones here. Here we have a drop base rally and here we have a rally base rally, the 15 minute zone. Again within these 15 minutes fine tune with 5 minutes time frame. Sorry, something is, actually we have two 15 minute zones here. The first one is a drop base rally. This is not having a fine tuned zone, but here you have another drop, two base candles and rally. From here again picked up and again this candle is started. Go to the 5 minutes time frame. The first 15 minute zone we don't have a proper structure. So here rally, two base candles and drop candle. So there is no demand zone here. So this 15 minute zone you can ignore. And in this 15 minute zone you have drop base rally, two base candles and a rally with pro gap. So here drop base rally is created again. So definitely you can plan a trade. This could be a high liquidity because a new LOTL zone is created, but it actually did not touch. From the pro gap only it created drop base rally. If the risk is within your accepted limit, plan your trade here. Here you take an entry, here your stop loss or add some buffer. If your risk is very high, if you don't want to add stop buffer, okay, it's on your own risk, you can go for that. See, ignoring the stop buffer should happen only when risk of the zone is very high. At that time only you have to take chances. But remaining situations, keeping stop buffer is advisable. There are people, they don't use stop buffers. There are. But sometimes any slightly below, they will exit and they book the loss. After that market goes up, they will be missing the opportunity. But that is their way of, their style, way of doing the trading. But anyway, this is still a fresh zone, this drop base rally. And next we have a rally, 3 base candles and a rally. This is also a fresh zone. This fine-tuned type 2 proximal is fresh. But anyway, OFSS also today we did not get trade. This is the daily candle today. JK Cement we discussed. The next one is Alchem. Alchem is a 75 minutes. Definitely we get by seeing this some kind of share. Maybe if we take a trade yesterday, today we would have got a huge profit. That kind of feeling we get. But anyway, this is a tested zone yesterday. Today it went up to 75 minute zone. Almost close to the 75 minute zone it went. It almost reached the target. This is 75 minutes demand. This is 75 minutes supply. This is our entry and this is our target. See, huge ROI you would have got for short-term traders. But we, HLQ zone strategy, we have to apply only in the intraday zone. HLQ zone strategy. But short-term traders, if you feel the trend, everything is supported, you can plan. But remember, you can't trade against the trend. Okay, this 75 minute zone rally, 4 base candles and rally. This one is fine-tuned with 15 minutes time frame. Here we have a drop base rally, 15 minute zone. Drop base rally. This one is fine-tuned with 5 minutes time frame. So it is having a, see this is a, I consider this as a failed ERC. Rally as a leg-in, 2 base candles and a rally. This is a fine-tuned 5 minute zone. And here yesterday it took the trade and then moved up. And yesterday prices closed here, somewhere here. And today again price continued from here and traveled almost close to the 75 minute zone, a little before started moving down. Previously also see, just before the zone it is started. Let me draw a horizontal line, you will understand. Maybe institutions are adding more and more supply before the zone. Okay, this is anyway, Alchem we didn't get a trade. Even if you get, we would not have planned a trade here because it is a tested zone. HCL Technologies, we discussed. Loda, have we discussed? Yeah, Loda is the one, a very good, it could have been a good trade, but we don't have a fine-tuned 5 minutes. See, from this zone, how it moved up. But why we didn't plan? Because there is no fine-tuned zone. First of all, this is a 75 minutes high liquidity demand zone. Our software identified this as a rally, base rally. This 75 minute zone we fine-tuned with 15 minutes time frame. We have excellent rally, base rally. But look into the 5 minutes, definitely you feel the structure has to be violated. Of course, that is what happened today. The zone is pierced. See, all these are all base candles. You have a rally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 base candles are there. And this is the leg out. Maybe the imbalance started from this candle. If you assume like that, 11 base candles are there. So that's why such kind of zones will be easily violated. 80% scenarios. That's why we are telling lesson 16 you learned. When a zone can be violated, 80% scenarios we can predict. This also we predicted because there is no proper 5-minute zone. So today it is slightly pierced and then sharply prices moved up. Below I looked into the 1 minute also, there is no proper 1 minute structure, maybe tick wise data, some strong institutional order flow might be there. But not up to 1 minute level, we don't have any zones here. But anyway, we can't take such kind of trades because today it moved up, every time it won't happen like this. Only 20% scenarios you may see like this, 80% scenarios it will give you losses. So that's why we have to stick to our fundamentals. If the zone structure is not good, that's it. Even after that price move, you should not bother about that stock. That is once in a while scenario. And remaining 3 we discussed. So this is about high liquidity zones analysis, performance evaluation. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.